Hi viewers, welcome to our channel RJ's Info. This video is about how to prepare cash flow statement in Excel with a detailed explanation. First, we have to understand what is cash flow statement. It provides summary of all cash inflows, receipts, and cash outflows payments of a company over a specific period. If you are taking 12 months, you have to compare with 12 months. If you are taking quarter, then we have to take only quarter. It shows how a company generates and uses cash, providing a clear picture of its liquidity and solvency. There are three main sections. One is for operating activities other than cash, which deals with current assets and current liabilities. Second one is investing activities, which is related to non-current assets. And third one is financing activities, long-term liabilities and equities. Let us start calculate net cash flow from operating activities other than cash. First, we have to get the net income from profit loss account. This is a balance sheet. This is profit loss account income statement. Okay, so net income is 33. Once we start with net income, we have to add back non-cash expenses like depreciation and amortization. Then we have to adjust for changes in working capital. Increase in current assets decreases the cash. Decrease in current assets increases the cash. I just show in Excel sheet how it affects. This cash is in a asset side, and if any item increases, for example cash receivable increases by 5 lakh, here the balance is increased. To the extent of 5 lakh, cash should be reduced. Then only the total will be tallied. So any item increases, cash will be affected. Here inventory, if inventory is 3 lakh reduced, means here also 3 lakhs reduced. To the extent of 3, it should be increased to cash. So within the cash side, if anything increases, cash is decreases. If the any item decreases, cash is increased. In opposite side, liability side, if liability increases, cash also increases. Okay, I just show you. I increase by 3. You just add 3 here. So total is tallied. So within the same cash side, if item is increases, cash is decreases. Any item decreases, cash is increases. In opposite side, liability side, if the item is increases, cash is increases. If the liability side decreases, cash also will be decreases. Again here I just reduce it to 2. Okay, make it 3 lakh. To the extent of 3, it should be adjusted. Like that, we have to keep in mind. We have to add depreciation. Depreciation is available in profit loss account. 5 lakh. Okay. Adjust for working capital. First we have to take care of current assets. Any changes in current assets we have to take care. Here in 24 30 lakhs and in March 25 40 lakhs. Increase of 10 lakhs. So within this same current assets, so this should be decreases the cash. Minus 10. Inventory also increases. It means cash is reduced. Accounts payable is increases. It means cash should be increased. 3. Fixed assets increase of 20. It means cash should be reduced to extent of 20 since it is a asset side. Addition. Minus 20. For fixed assets addition, it's a outflow of cash, uses of cash. So almost all assets are considered. Only we have to take care of liability side. Short-term debt reduced by 5. Short-term debt 5 lakh. Reduction in cash. Then increase of long-term debt 10 lakhs is increased. Common stock increased by 20. Now only one is pending, that is earnings. Opening balance is 25, closing balance is 52. We have to see the difference. Opening balance is 25, then current income is 33, so 58 has come. Balance is 52, closing balance 52. There is a difference of 6, that is dividend. That should be adjusted here. Finally, net adjusted cash flow has come. Then we have to add previous year cash balance 50. This should match with current balance. It is perfectly matching. If you miss any one step, you will not get reconciliation. So step by step you have to do what are the differences and how to make some adjusted properly. Based on that only the cash flow statement will be perfect. If you like this video, please share it, comment it, please do subscribe for upcoming videos. Thank you.